602 billion cedis in today's Treasury bill auction to bounce back from its previous under-subscription. And Chief Executive Officer of Daylex Finance, Joe Jackson, advises low inflation requires tactical shift for businesses amid rising producer costs.
Thinking during the time of high inflation should be different from our thinking in the time of low inflation. And that our thinking should now revolve around, is my cost rising faster than my revenue?
Plus, Trade Minister discloses Central Phase 2 expansion to drive downstream petrochemical manufacturing base.
To attract petrochemical manufacturers, fertilizer blenders, and plastics processors, not as energy products, but as export-oriented manufacturing investment under our Accelerated Export Development Program.
These and many other stories lined up for you. I am Michael Ogbodu. Stay tuned. Well, straight into our top story, and Government of Ghana returns to the domestic capital market, seeking to borrow 4.602 billion cedis through its weekly Treasury bill auction across the standard 91-day, 182-day, and 364-day tenors. This report has the details.
This latest auction is a critical move by the government to rebound from a recent setback on June 19, 2026, which saw an undersubscription from investors. In that previous auction, the state fell short of its 5.274 billion cedis target, securing only 4.206 billion cedis as investor appetite waned. 3Business is closely watching this week's auction to see if government will adjust interest rates to entice institutional investors and banks back into the fold, or if liquidity constraints on the domestic market will continue to pose a challenge to the state's short-term enhancing goals. Historically, government has relied heavily on these short-term instruments to manage its immediate fiscal deficit, making consistent investor participation vital for national budget execution. However, persistent macroeconomic pressures and fluctuating inflation rates have left local investors increasingly cautious about tying up capital without higher premium yield. If this auction fails to meet a target of 4.602 billion cedis again, the Ministry of Finance may be forced to explore more stringent expenditure cut or seek domestic alternative financing avenues to cover its obligations.
And that was a 3Business News Desk report. Away from that, the Chief Executive Officer of Daylex Finance has urged local businesses to shift their mindset from the historical eras of hyperinflation and adapt to the current low inflationary regime. Joe Jackson warned local business owners must urgently reevaluate how they manage operations and risk as the country navigates a low inflationary regime mixed with surging behind-the-scene production costs.
Consumer price inflation for March 2026 stood at 3.2%. That of April was 3.4% and increased to 3.7% in May. Producer price inflation in March 2026 was 1.6%, rose to 2.7% in April, and more than doubled to 5.8% in May. Speaking on economic trends affecting the private sector, Jackson noted that while standard headline inflation is currently stable, underlying operational pressures are quietly mounting.
Our thinking during the time of high inflation should be different from our thinking in the time of low inflation. And that our thinking should now revolve around, is my cost rising faster than my revenue? Watch the producer price index. Watch the fact that between April and May, it shot up and more than doubled. That is why you shouldn't be sleeping. The house is not on fire. Let it not be said that inflation has reached a place where we are all worried and scared. That's not what we are saying.
The Daylex Finance Board identified external factors over which local businesses have no control, such as climate changes and global conflicts, as imminent threats that will trickle down into the domestic economy.
This is an effect across West Africa. So the places where we import food from, they will also be suffering the same effects of unseasonal weather patterns that we are suffering. Then you have the issue of the Hormuz Strait, and fuel prices are going up. It means we should expect that not only would food be scarce, the cost of transportation will go up, all increasing inflationary pressures.
Jackson urged business operators to discard passive approaches and implement aggressive protective measures across 3 key areas.
You should be cautious. That is why you should be careful about taking dollar credit. That is why you should give short-term credit when you give credit. And that is why, most importantly, you should practice discipline in your expenditure.
That was the CEO of Dalex Finance, Joe Jackson, ending that report. Now, the Minister for Trade and Agribusiness, Elizabeth Ofosu-Ejari, has disclosed that government is in active discussions with global investors to anchor a thriving downstream petrochemical ecosystem around the Central Oil Refinery. Speaking at the sword-cutting ceremony for Phase 2 of the refinery project in Tema, the Trade Minister emphasized that the facility is engineered to transcend basic fuel generation.
My recent engagement with prospective investors across Morocco, China, the United Kingdom, and beyond have confirmed a deepening and genuine interest in Ghana's business environment. It is no surprise then that companies such as Centro have moved from interest to action, committing additional investments in the second phase of this project. My ministry has been in active discussion with investors to establish downstream industries that will deepen our manufacturing base. This refinery gives us the feedstock security to attract petrochemical manufacturers, fertilizer blenders, and plastics processors, not as energy products, but as export-oriented manufacturing investment under our accelerated export development program.
So that was the Minister for Trade, Industry and Agribusiness, Elizabeth Ofosu-Ejari, speaking there. Now, meanwhile, Minister for Energy and Green Transition, John Abdullahi Jinapor, has declared that the expansion of the Central Oil Refinery will serve as a cornerstone for anchoring the country's energy security and resource value retention. He noted that upon completion of the Phase 2 expansion, direct employment levels at the refinery will scale up significantly, jumping from the current 700 to 800 personnel to approximately 1,500 personnel.
Adding value to our own products and resources, we are going to take the Central Refinery from a refinery capacity of 40,000 barrels per day to 100,000 barrels per day upon completion. So we are anchoring energy security. We are adding value to our own resources, but more importantly, we are creating jobs. And from my discussion with the chairman, the employment level will move from about 700 or 800 to 1,500 upon completion of this refinery. That means we are impacting homes. We are also anchoring our economy, protecting ourselves from global shocks, and stabilizing our currency. And so for those of you who think that it's just figures, we are talking of real employment and real jobs for the people of Ghana.
So that was Minister for Energy and Green Transition, Dr. John Abdullahi Jinapor. We'll bring you updates now from the currency and the commodities market.
On the interbank foreign exchange markets, the dollar is selling at 11 cedis 27 pesos. It gained 4 pesos. The British pound is selling at 14 cedis 90 pesos. It gained 9 pesos. The euro is selling at 12 cedis 83 pesos. It also gained 8 pesos. However, be guided that these figures could be higher at the Forex Bureau name. On the global commodities market, Brent crude is trading at $75.61 per barrel. Gold is trading at $4,038.54 per ounce, up by $39.13. Cocoa is trading at $5,247 per ton, up by $274.
Those were updates from the currency and the commodities market. But before we leave you, Government of Ghana has finalized agreement with the Ghana Chamber of Mines to purchase 30% of the gold output from all large-scale mining firms effective July 1, 2026, under the new framework coordinated by the Finance and Lands and Natural Resource Ministries. The gold will be bought locally in raw door form. Transactions will be settled in cedis using the Bank of Ghana reference rate at a 0.55% discount, widening the scope of a previous 2022 central bank arrangement. The policy aims to secure local value retention, targeting London Bullion Market Association accreditation for at least one domestic refinery by 2030. The initiative supports the Ghana Accelerated National Reserve Accumulation Program's target of 15 months of imports covered by late 2028 and President Mahama's vision of zero raw material exports by 2030. On that note, that'll be all for the business segment here on the morning show. For more stories, check out our website, it's 3news.com/business. I am Michael Ogbodu. Thank you for tuning in. As always, please stay safe, and your regular host is here in his